So, welcome everyone to this amazing revision where we will revise Ind AS 40 investment property. But before revising, if you are watching this on YouTube and if you have not subscribed to this channel, first subscribe and then only watch the revision. Right? Also, if you like the revision, do like and share it with your friends as well who might be benefited from this revision lecture. Okay? So, why waste time? And let's start the revision in 3, 2, 1 and go. So first of all, the number of Ind AS was Ind AS 40, name is investment property. So when we will come under this Ind AS, whenever there is any investment property which is held for earning rentals or for capital appreciation or for both. So if either of the criteria satisfied, it will be treated as an investment property, either held to earn rentals or for capital appreciation or for both. Acha. Apart from this, there was some confusion which can arise. So I have bifurcated this part. So just read this. First of all, even in Ind AS 16 it was written, if it is held for use to earn rentals, for rental to others. In Ind AS 16 this was mentioned. So rental to others is covered under 16 or 40. So just remember, if giving on rent is your business, then you will go under Ind AS 16. If giving on rent is not your business, still I have given the property on rent. For example, I am into teaching business, but I had excess funds, so I acquired a property and gave it on rent. So giving on rent is not my business, still I am giving it on rent, so it will be Ind AS 40. Also, land and building is only covered under Ind AS 40. Okay, do remember. Acha, apart from this, if buying and selling the property is your business, then that property will be an inventory for you. But if you are buying a property, holding it for capital appreciation, so that you can later on you can sell it, but this is not a business, so that will be covered under Ind AS 40. Do remember that part. Okay. Then there is also one more clarification given of owner occupied property. Owner occupied property is nothing but a pet name for Ind AS 16 PP. Right? Okay. Some examples are given. Out of this, only one example is relevant, that is employee occupied property will be covered under Ind AS 16. Do remember this part. Okay. Then there was the recognition criteria. When will you record the investment property in your balance sheet? Same criteria like Ind AS 16. Future economic benefits and cost can be measured reliably. Then there was this point of measurement. What is the meaning of measurement? At what value will you record it? So there are two cases in this: initial measurement, subsequent measurement. Initial measurement always at cost. What will form part of cost? If the asset is purchased, the same principles that we studied in Ind AS 16: purchase price, add non-refundable taxes, add all the directly attributable expenses, which will include the following. Okay. Also, if there is any deferred consideration, that means if you are promising to pay after 1 year and they are charging you some interest, that interest will not form part of your cost. You will record the asset at the day one cost. Okay, do remember that part. Okay, do you remember my chroma wala example which I gave in Ind AS 16? If I'm paying for the MacBook on day one, I will have to pay 2 lakhs. If I pay after 1 year, I will have to pay 2.2 lakhs. So that extra 20,000 is interest. That will not be capitalized unless and until it is borrowing cost as per Ind AS 23. That will be studied later on. Otherwise, that interest will not be capitalized. We will record the asset at 2 lakhs only. Same point is here as well. Acha, what if we acquire the investment property by way of exchange? That is same like Ind AS 16. For outgoing asset, we recorded carrying amount. For incoming asset, we have three preferences. First preference is fair value of asset given up plus cash paid if any. Second preference is fair value of asset acquired. And third preference is carrying amount of asset given up plus cash paid if any. If the transaction lacks commercial substance, then there is only one preference, that is carrying amount of asset given up plus cash paid if any. Of course, I am rewinding these points quickly because these are same like Ind AS 16. Okay, sir. What if the investment property is held by lessee as a right to use? That measurement will be done as per Ind AS 116 leases. Leave that point. Okay, done, sir. What about subsequent measurement, sir? So here is the interesting point. It is different from 16 and 38. Yes, in subsequent measurement also we have only one model, that is cost model. Fair value is only found out for disclosure purpose. Okay. So if anyone will ask you whether fair value is to be computed, you will say the answer is yes. Why? But only for disclosure purpose. Acha, one more thing. What if the fair value is not available? So you will have to state the fact along with reason. What is the meaning of fact along with reason? It means that you will have to state this fact that fair value cannot be computed along with the reason why it cannot be computed. Simple. Clear? Okay, sir. Then subsequent cost incurred. If you are incurring any subsequent cost in the nature of servicing or repairs and maintenance, then it will transfer to profit and loss. But if you are replacing any part, then you will add the new value of the new part and the old carrying amount of that part will be recognized. It is just like component accounting. In Ind AS, do you remember we used to do this? If you are replacing any engine, so we used to add the new value of new cost of the engine and replace the deduct the old value of the engine, old carrying out of the engine. Same thing. If you are replacing, let's say in a building or replacing any wall, so the new cost of the new wall will be added and the old carrying amount of that old wall will be de-recognized. Okay, one clarification also given that if you have an investment property, it will also be depreciated except in case of land. So if a IP is a building, you will depreciate. If IP is a land, you will not depreciate. Simple. Then the next point, property held for more than one purpose. What is the meaning of this? You are having a big property, some portion of it you are using it, some portion of it are renting it. Example, you have a 10-floor building, 7 floors you are using it, 3 floors you are renting it. So can the floors be sold separately? Of course, yes. Floors are saleable separately. So if these two parts can be sold separately, you can account for both these parts separately. The portion you are using, you will show as PP. The portion you are renting, you will show as IP. But what if the two parts cannot be sold separately? Example, I have a single flat. Some portion of the flat I'm using, some portion of the flat I'm renting. Now a single flat cannot be sold separately. Right? So in that case, don't check the majority. Don't check the majority. Here you will check whether the use portion is significant or not. So the portion you are using, whether you feel this is significant or not. Significant does not mean majority. Significant means material. Whether your usage is significant. So I can say in my case 30% is significant for me. 30% space in a flat is significant, right? So if the use portion is significant, then the full property will be classified as PP. But if you feel the use portion is not significant, then the full property will be IP. So what is the definition of significant? It is a matter of judgment. Some portion might be significant for you, but not for me, and vice versa, right? Okay. Next point, ancillary services provided to occupants of property. What is the meaning of this? Along with the property, you are also giving some additional services. So if those services are insignificant, for example, you gave a property, along with the property, you gave security services, only one single service. That means only one single service along with such a big property, such service can be treated as insignificant. So in that case, you will treat the property given on rent as IP only. But what if you are giving the property also, along with that you are giving all the services, cooking, security, reception, housekeeping, and all services you are only providing. So hotel also you are providing to tenant, and the services also you are providing to the tenant. So in that case, we will treat the ancillary services given as significant. So it is as good as you yourself are running the hotel, right? So you will treat the property as PPE and not IP, right? Do remember that part. Again, here, which services are significant, insignificant, it is a matter of judgment. Okay. Next point, property leased to other group members. Now, what is the meaning of this? Let's assume parent gave a property on rent to subsidiary. So, parent prepares two types of financials, SFS and CFS. So, from parent's individual point of view, this property will be treated as IP. But from CFS point of view, parent gave the property on rent to subsidiary and subsidiary is using it. So, from CFS point of view, the property is being used within the group. So, for CFS point of view, this property will be treated as PPE only. Okay, this is given here. Next point, transfer to or from investment property. Can we move out of investment property to some other Ind AS, or can we come into investment property from some other Ind AS, right? That is transfer to or from investment property. So such transfer is allowed within. From 16 we can come to 40, from 40 we can go to 16, from 40 we can go to 2, from 2 we can come to 40. But when will this transfer happen? Only when there is evidence of change in use. Okay, if there is only a change in management intention, if the management is thinking that we will stop using and start renting, but there is no evidence, only management is thinking as of now. So thinking is not sufficient. Only intention is not sufficient. There should be evidence. How do we provide the evidence? If previously you were using it and now you want to rent it, so you will stop using it, right? And you will try to find the tenant. You are actively finding the tenant for renting it. This is evidence of change in use. Then you can classify from 16 to 40. Okay, do remember. So such transfer is allowed. First point. Second point, transfer will happen only when there is evidence of change in use. Third point, only change in intention is not providing any evidence of change in use. Okay. The fourth point, when you are transferring from one Ind AS to another Ind AS, at what value will the transfer happen? So the old carrying amount of the previous Ind AS will become the cost of the new Ind AS. Let's say, for example, I had a PP of 10 lakhs. I used it for 3 years. Now the latest carrying amount is 7 lakhs. On this date, I decided to rent out the property. So this 7 lakhs will become the cost for IP when the transfer happens. Simple. Okay. Now, last point is derecognition. What is the meaning of derecognition? It means moving the asset out of your balance sheet. It happens when you sell the asset or the life is over. If you are selling it, you might arrive at some gain loss. It will be transferred to profit and loss. Simple. One summary is given. You can refer it on your own once you have read the full FR. Okay. So this was the revision of concepts of Ind AS 40. Okay. Perfect. So now we will revise all the questions of Ind AS 40. We have done the concepts. Now it's time to revise all the important questions. So in this revision, I will also tell you the important questions, right? And also we will revise those questions, because Out of Ind AS 40, only few questions are there which are very tricky or important. Rest are basic questions, so you will be able to tackle them even without doing it for the next time, right? So now let's start revising. The first important question which we should revise is illustration number 9. Now let me give you a gist of what this illustration had to talk about. So ideally this question is based on the concept of transfer from investment property to another Ind AS. Do you remember we can transfer from Ind AS 40 to another Ind AS, or from another Ind AS we can come to Ind AS 40? Same is the case here. So ideally we had a land, right, which we purchased on 1st April 11. We used it till 30th September. Because it is a land, it is non-depreciable. So till 30th September, it was shown at 2 CR only. Now from the next day, we started to began to convert the property into 10 separate flats, which is intended to sell in ordinary course of business. Ordinary course of business means you are going to sell it and it is going to be a nature of business. That means from Ind AS 40, you will go to Ind AS 2. Now let's clarify this thing. When you are going from Ind AS 40 to another Ind AS, when do we do that? When there is evidence of change in use. There was evidence on 1st October. At what value will we go from Ind AS 40 to Ind AS 2? We will go at the cost of 2 CR. The carrying amount of Ind AS 2 will become the carrying amount of Ind AS 40 will become the cost of Ind AS 2. Simple, right? So I showed it. On first day we have a land also, then land is not depreciated. So after 4 years also it will be at the same carrying amount, and the day of transfer also it will be at the same carrying amount. Now once it is gone into Ind AS 2, now the provisions of Ind AS 2 are applicable. So what we did was 1st October the inventory's cost was 2 CR. Then we also incurred some construction cost because we wanted to convert the land into some flats. So we incurred a construction cost of 60 lakhs. So now total cost of inventory is 2.6 CR on year end. The question says it is still in WIP stage. It is not yet ready. So you will have to measure the inventory at cost or NRV, whichever is lower. Cost is 2.6 CR. The information of NRV is given below. They are saying each flat you will sell for 50 lakhs. You have total 10 flats, right? And cost of completion is 40 lakhs. For WIP, the NRV is selling price minus cost of completion, right? So you will say it is 50 lakhs into 10 flats, 5 CR minus 40 lakhs. So total NRV will be 4.6 CR. Okay. So now 2.6 or 4.6, whichever is lower. So you will value at 2.6 CR. Done. This was illustration number 9. Now let's move on towards illustration number 10. Again, a very simple question. What are they basically asking is we had two buildings, building A, building E, building B. So we want to show the balance sheet extract of this. So the information was given that the building A was investment property. Information of purchase was given. We purchased now the important point here is they are saying we want the information, we want the values as on 31st March 20. But how the information is given, that is important. It is saying that we have a building A, life 20 years, out of which 5 years have expired as on 1st April 19. That means the life expired is 5 years, but this expiry is till 1st April 19. We want the life expired till 31st March 20. So if your happy birthday on 1st April 1st April 19, you have become 5 years old. That means 1 year later, you will become how many years old? 6 years old. Remember happy birthday wala example? Okay, sir. So the life expired is 6 years till 31st March 20. Do remember that part. So accordingly, we will calculate the depreciation of building A. Similarly, information for building B was also given. So we will do that. Some profit and loss items are given. We will record in profit and loss. And this para talks about the fair value information. So if this building A and building B are investment property, fair value is used for disclosure purpose. So just see how I did this question. So we first computed the values of building A. I depreciated for 5 years separately and then for another year separately because I wanted the depreciation for that particular year also so that I can record in profit and loss. Similarly, building B is only 1 year old. I will depreciate this. So I got the carrying amount of A and B on 31st March 20. I will record that in balance sheet. Then profit and loss items were given, recorded as it is. One more item will appear, that is depreciation. So only take the current year depreciation. Okay, that's it. And fair value we are giving it for disclosure purpose. Done and dusted. This was illustration number 10. Then we come to mock test, RTP, MTP, past exam section. There was one question number 1. Here it is a very simple case. We have 10 floors building, value of 10 CR. First 7 floors you are using it. Top 3 floors you are renting it. So this is top 3 floors are IP. Below 7 floors are PP. Simple. Bifurcation is given. The cost of top 3 floors is 3 CR. So out of 10 CR, 3 CR is IP. So 7 CR will be PP. And the question says for this 7 CR, you have to give the bifurcation also. You have to give the bifurcation also of land and building. I'm not saying this, the question says that in PP, in where it is given, the remaining cost of 7 CR can be allocated 25% towards land and 75% towards building, right? So we have total 3 assets. One is IP, then one is PPE land, and then is PPE building. Okay, so we have done in the same procedure. If you want to see, just see here. We have a PP, land and building, and IP. So IP cost was 3 CR. Then the remaining PP was 7 CR. Under 7 CR, you have to bifurcate land. Land was 25%, building was 75%. This was given in the question. So we bifurcated. We got the cost on day 1. Land you will not depreciate, building you will depreciate. You will depreciate and find the value on year end. Okay, so we got the value on year end. The question has done one mistake saying that the company wants to follow fair value model for IP. It is not permitted. For IP, you have to follow cost model. For PP, they want to follow cost model, that is permitted. Okay, so for PP, we can follow cost model. But for IP, fair value not permitted. You will only follow cost. Fair value can only be given for disclosure purpose. Okay, so fair value was given, but the fair value of total property was given as 15 CR. I wanted to bifurcate between all the elements, between the land element, between the building element. I wanted to bifurcate it. So how do I bifurcate it? So I bifurcated the total fair value in the ratio of cost on day 1. So we bifurcated it, right? So we got the fair value of respective parts. Ideally, if you go to see, the fair value of these two parts are irrelevant, but the fair value of IP part is relevant for disclosure purpose. Simple. This was question number 1, done and dusted. Then we came on towards question number 2, a very, very, very good question. Why? Because here we have 3 properties, right? Now, what the question does is, the company has done certain mistakes in this question, right? So it asks us to rectify those mistakes, right? So for example, they have 3 properties. The first 2 should be PP, the third one is IP, right? So now what they are doing is, subsequent measurement for the properties are given. For property 1, cost. For PP, cost is permitted. For PP, revaluation is also permitted. But for IP, revalue is not permitted. So one mistake. Second mistake, which maximum students will forget, is these both PPs are factory. Do you remember same class, same model? So for both factories, either you should apply cost model, or for both factories, you should apply revaluation model. Same class, same model. Okay, do remember that. Okay. Then what the company has done is, they has presented all 3 properties as PP. Mistake. Only 2 are PP, 1 is IP. Okay. The company are not depreciating. Again a mistake. You have to depreciate. Then they are saying that the difference between purchase price and market value is transferred to PNL. Wrong. It should be transferred to OCI. One more mistake. Now they're asking us advice to correct it and prepare a balance sheet extract. In case you remember, we have to solve this question in 2 cases, case 1 and case 2. Why sir case 1, case 2? Because for PP, the case 1 will be assuming that for both the PPs, you are following cost model, right? And for IP, you are following cost model. And case 2 will be for both PPs, you are following reval model. And for IP, again, you are following cost model only, right? So in this question, I told you to give the relevant concepts also, because advice was asked. So what all concepts do we present? Here it is mentioned. You can just read this, okay? Then we give case 1 for both PPs, you are using cost model. So I just depreciated both the PPs for 1 year and IP for 1 year. I got the cost of PP on year end, IP as well. IP I am disclosing the fair value as well, and depreciation in profit and loss extract, right? And then in case 2, for both PPs, I will use reval model, and for IP, I will use cost model only, because for IP, we have only 1 model. Now for reval model, the fair value was given on year 1 end. So first you will find the carrying amount on year 1 end. So take the cost, depreciate for 1 year, you will get the carrying amount on first year end, compare with the fair value, you got a gain. Same is the case with property number 2. Okay, we again got a gain. And property number 3 is, it is because IP, you will follow cost model, right? Now you will record the PP at the respective fair values. IP you will record, depreciation you will record. But one thing which you will forget is, you also got a gain. So such gain will also form part of your PNL. But under PNL, do you know we prepare a separate column OCI? See, ideally PNL has 2 columns. One is PNL itself and one is OCI. So under OCI, you will show revaluation gain. And such gain, in case you remember, is accumulated in your other equity, revaluation surplus. So you will transfer to revaluation surplus as well. So we have done that, right? The next question which is important is question number 3 of MTP RTP past exam. What does this question talk about? So it gives you various expenses. So you need to see whether you need to capitalize or expense it out. So this all expenses you need to capitalize. What all are to be not considered? Here one expense is that 10 lakh construction cost, but it says including 60,000 refundable taxes. So refundable taxes we will exclude, right? So you will only capitalize 9.4 lakhs, and 140,000 is abnormal wastage, which will be transferred to PNL. So ideally you get a total cost. If you consider, you get a total cost of, I guess, of after considering all the expenses, you will get 63,40,000. The question says that, now the important part is the question says that it has a 2-story building. That means it is a 2-floor building. Now the relevant part here is, it says out of these 2 floors, the ground floor is being rented to subsidiary. Do you remember property leased to other group members? So when you are renting the ground floor to subsidiary, from SFS point of view, the parent will say this is the IP. But from CFS point of view, because you are renting it to your own member, from CFS point of view, it will be PP only. So what about the other floor? The other floor, as it is, the parent is using it himself. So the other floor from SFS point of view is also PP. From CFS point of view is also IP. So sorry, for CFS point of view also it is PP, right? And they say that equal value can be attributed to each floor. Now how do I present this? So see, I got a total value of 63 lakh 40. Ground floor 50% value, first floor 50% value, right? The cost in SFS will be bifurcated 50-50%. Now in SFS, how do you show the ground floor? It will be IP from SFS point of view, and the first floor will be PP only because they are using it only. But from CFS point of view, both the floors will be PP because the ground floor you are giving rent to your own subsidiary. When you are giving in rent to your own group member, in that case from CFS point of view, you will not classify as IP. Right? Do remember that point. So just to explain you better, I have also given the extract. So the SFS extract will look something like this from parent's point of view, of course, because parent is giving on rent. So for parent, 50% property will be PP, 50% property will be IP. But from CFS point of view, for parent, the full property will be PP. This is how it will be shown, and this completes our revision, our complete revision of Ind AS 40. So in case if you like the revision, don't forget to subscribe to the channel because more such English revision videos will be uploaded on this channel. Also, if you want these board notes which where I have written the solution, I will upload on my Telegram. On my Telegram, you can join and scroll to the file section. You will find this board notes. Okay. So I hope you like it. Do share it with your friends. Thank you so much. Bye bye everyone. Take care. See you all. Bye bye.